What is up, homies and homiettes, and just everybody, really. Um, Apologies, my allergies are kicking my ass today, so we will kind of probably go through this a little bit more quickly than usual. But today was a much safer, easier day. I tried not to do anything extra. I did have to kind of reassess an Apple and Spy Zone after the morning action on them didn't pan out to the morning plan. But they thankfully went well. I really was being patient today and not doing anything extracurricular. I didn't have a huge day, but I had an easy one, which is nice for the mental. So let's get started. Yeah, Apple was the first one. I said I like the pullback to one. God dang it! I like the pullback to 165.88, 164.92, and if she goes to break pre-market high. So this was the zone here, as you can see. Now, in pre-market, I was actually on Voice talking about, I think, a more aggressive zone that has a chance to get filled would be this one. And boy, it would have been the perfect zone. But after yesterday and the beating that we took and the fact that stuff was gapped up pretty big, I wanted to give myself a little bit more safety. So unfortunately, as a result, I ended up not getting fills off the bell. Um, Instead, later on in the day, I had to put together this little zone here based on this. It was actually right around here. I mentioned it in Voice. I said, okay, well, things are consolidating. You can see this tight consolidation on Apple for a bit. How do we, how do we play that, or how do we create a strategy for that, or an idea? And my plan was to, at the time, it was about right there, was to just draw a trend line, figure out where confluence of trend as well as indicators and consolidation range on price action, which you can see right here on the 5 and the 10. Where can all of that kind of meet? So this is how I came up with this zone here. And then I took it right here for about 12 cents or something like that, nothing huge. It was a nice, solid, easy little move. You could have actually taken it, like, if we're getting real technical, you could have taken it here, sold it here, taken it here again, sold it here, blah blah blah. I just took it once, and I was donezo. As you can see later, though, it became what is the perfect example of the letting it push past the zone, test a key level, and then revisit. So as you can see, high of day was right here. The price moved up, tested high of day, and rejected. So anytime that the move comes from underneath the zone, I like to have a confirmation of strength before I play the zone again. I don't want to just catch it right here, although, it would have worked out. Sometimes you just get these moves up, these false fake outs, and then it creates what would, at that point, then be a lower high, and it continues to dump. So, I didn't play this, but it would have been in terms of, like, what I try to teach. That picture perfect example of a push past the zone, a test of a key level. In this case, it was high day, and a push back to the zone for the retest. And if it can do all of that, if it can come up past, come back down, that's a good show of strength. A lot more so than it just pushing up to the zone and you having to basically speculate if you think it'll have the continuation. So I really liked that as I watched it. Of course, I didn't trade it. I'd love to tell you that I did. The zone would have worked great if you did take it, but unfortunately, it was not a plan that I acted on. Unfortunately. So before we move past this one, though, let's see how I got this zone. I mean, right here you can see on the 10, there's pretty obvious, easy, lines here. I actually, on this one, as I mentioned earlier, I started off with a couple of different ones where I was like, okay, there's a decent consolidation range right there. There's highs yesterday. At one point I had one down here, and I was like, all right, so with all these lines, now what do I do? Assume this part is gone. I just drew some lines that looked like they might be decent to me, and then I came over here to the 1 hour. And, so on the 1 hour, I was like, all right, here's my lines. What do I think looks good? And at the time, I was like, okay, well, this one here will give me access to the 20 SMA. So, maybe that's better than these just based on that. You got flat tops here. You got two bodies that are pretty well defined there. You got the wick down here. And then I came to the left and I said, all right, well, and I saw that, that zone would also incorporate this nice little area of peaks. I was like, all right, so maybe that's the one. Because then I was like, well, this one down here would also be good, but I felt like it was a little too low, and that if price managed to come all the way down there, that it might have a harder time coming back up. So ultimately, the most aggressive of all of them ended up being like the zone. Um, but that's okay. You don't win them all. That is part of the process. But that is usually the process when I'm not sure of one specific zone compared to another. That's the way I do it. I'll draw some multiple lines on the 10, see which one I like based on the 2, 5, and 10 in front of me, and then I'll go check the 1 hour to be like, all right, of these, if I had to rule some out, what do I think would be the best one left. So that was the idea there. Now let's see, what was the next play for us today? Macy's. Macy's was, as you guys know, Macy's is like one of my absolute favorite tickers. The days that it goes, it goes. Today it was actually kind of meh. I mean, we got a great move based on the chart out of it, but spreads were wide. It didn't move super quickly. At one point, like around here, it just went from like 60 to like 80. It was really bizarre. So it was an easy ticker to kind of like get stopped out on accidentally. Size too big considering how, like, let's say that the spread was 5 cents even though it was only a 30-cent contract, right? So let's say you take, based on 30 cents, you take 20 contracts, right? 20 contracts, you're looking for a 10-cent move, 5-cent move, whatever. I mean, I don't know, it's just an example. And like, okay, I'll give myself a 5-cent stop of 25. Well, because the spreads are so wide, by the time it comes down to 25 on the ask and it fires off that market order and fills you at the bid, you're actually taking twice the loss. You're getting filled at 20 if the spreads are still 5 cents. So, stuff like that, it makes it kind of hard to play, especially if it doesn't have a very defined, pop up. So here I actually, secured some gains, and then I re-entered my position because I was like, well, I can just have a tight stop. And thankfully that worked out for me, but like if you just took this move here and then it came down there, I mean, you could have easily had an L on this one as well. So it was just kind of some weird chop action, unfortunately. But, I did thankfully end up getting a really solid move out of it. I ended up getting like 20 cents or so, which on a ticker that costs 30, 40 cents is a good is a good day, I would say. So I was happy about that. Now, how did I come up with the zone? Let's take a look. So right here again, one of my favorite things that I try to tell is, when there is pre-market action taking place over the majority of the trading yesterday, that's a nice sign of bullish sentiment to me, because I know that when push comes to shove, if price comes down, it can use yesterday's price action as means of short-term support, which I like. And if it was flipped and the pre-market action was down here, then I would be short biased, because, you could use these as resistance the same way it was, support today. So I looked at, okay, here are the peaks. Here's the nice layer of consolidation. If I had to draw a line that I felt like touched the most price action, it would be these. And then again, at one point I think I had it also like this, and I was like, all right, that looks okay. And then I said, well, that is a, quite a wide zone. If I was to do, here to there, it's hard to say. So I ended up deciding, I think initially it was like this. And I was like, well, that's kind of low. So if it does come all the way back there, kind of like the Apple example, it might have a hard time getting back up. And then again, I come over here to the 1 hour to basically tell me, what I need to know. And then I saw right here that this very well-defined wick, lots of good confluence here. And then I came actually a bit further back, and I saw that, boom, right here. Look at all this. Perfect lines, bodies, well respected. So I said, all right, that's the zone I'll go with. And then I just made 26.50 my stop, or 28.50 rather. And, that's kind of how I came up with that one. Now, as you can see here on the 1 hour, though, that the 50 SMA acted as a good means of resistance here. I actually took gains kind of periodically and ended up trailing my stop up here once I was in 20%. And it did, unfortunately, come to stop me out on the trail, which ended up being fine, because that allowed me to ride the move, as opposed to like right here where I sold everything else. I got a little bit more gas out of it. even if it did ultimately come to stop me out. So I didn't get the peak. I still managed to make, I don't know, a few extra cents per contract just on, that practice. So very happy with that. Very happy with that. Yeah, Ford, again, I apologize for the sniffles. I don't know if I'm getting sick or something. Jesus Lord. It looks bigger than it is. I mean, it was a great trade. It was a great trade, but it it looks like oh my God, dude, you fucking made insane money, but it really didn't move on the contracts that much. So Ford, I said I like the pullback to 1941 to 1932 and pre-market high of 1963. Now, after I said that was at here, now right before the bell, as you can see, the pre-market high changed to 1965, which is important to know. And in chat, I said, here, let's see, Ford from Palmer. Ford. Yep, here we go. So at 8:38, you can see here that I wasn't really liking, especially when I saw this at the bell, this little quick pop over pre-market high and a revisit down and then some trouble. That's when I said, all right, you know what? I'm gonna do Ford off of pre-market high down to VWAP. So that was right here on this candle. It ended up being up here, and it dipped down very, very beautifully to both, as you can see. And I took my position, and my stop was 19.6, which would have put me right here. And that just means like the low of the previous candle, which would give me a sign that like, okay, this is just another one of those like troubled false breakouts that it was doing early in this morning. So that pre-market high retest using VWAP as support, using the pre-market high as a means of support, gives me just a little bit better probability without having to worry about the slapping the ask and dealing with this chop back and forth. So that ended up being a really safe and good move. And even if it did come against me, I was able to kind of scale into this position as it dipped. So I had a bit more control over like what my max loss was going to be in that situation, which is nice because I kind of had an idea for where my average would end up. So good moves there. Contract wise, it went pretty well, but as you can see, 23 to 62, so over 100%, 200% almost. That's crazy. Of course, I didn't ride it that long. I ended up taking like 28 to 48 or 24 to 44, something like that. So still a really solid move. Can't be upset. Nice and easy. As you can see, as soon as it popped up here, I was like, all right, trail my stop, break even. Just kept going. As soon as it gave this next leg up, I moved my stop to right around here. And then I ended up trailing just about 4 or 5 cents. So it peaked at 48 and then came back down to stop me at about 44 or 45. All right, let's see what is next. Next we have SPY. SPY. Now SPY was another example, just like Apple, where I kind of had to pivot since my morning play was, again, same situation as you can see here, just a little too, or not aggressive enough. And, same exact concept on Apple of why I made my zone here. The charts even kind of look similar. I could have made this more aggressive zone, but I went for what I consider to be the safer route with a little bit more long-term or big picture 1 hour chart confluence. I don't think I did the Ford zone. Let's do that really fast. Maybe I did. Anyway, so yeah, the Ford zone. Let's do that first. Just I feel like the zones is an important thing to cover. So as you can see here, just looking at the 10-hour, look at this resistance right here, or resistance yesterday. As it trended up and created this what would be a wedge pattern yesterday that it ultimately kind of failed. You saw that boom, top, 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 all on this beautiful line right here. You come over here, you see that nice consolidation. This is support, and then boom, support again. Then it turns to resistance, 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 and then it breaks through and it uses this line of support in pre-market. So I felt pretty good about that. You can come over to the 1 hour and what do you see? Boom, even better confluence. You come all the way over here, consolidation, 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 consolidation. So this, I mean, I was like, dude, if it hits the zone, I'm feeling super good about it. I mean, it was just, you feel really good about that, seeing all this interaction within that range. And knowing that, again, it had the 20 SMA coming on the 1 hour as well. You come and look at the indicators elsewhere. You had the 50 period on the 10. You had the 200 on the 5, 200 on the 2. Like, man, I was really, really jazzed for that zone. But unfortunately, we ended up taking the pre-market. And I'm not upset. I'm not upset. But, sometimes you see those zones where you're like salivating, like, oh, man, everything lines up beautifully here. And then they just kind of like don't come into play. Now, that's not to say that, that same zone, because it's historically been impactful, that it might not be impactful tomorrow or over the next couple of days for sure. So, we still may have a chance to be redeemed in that fashion. So anyways, back to SPY. I apologize. I wanted to make sure that I covered that, because especially the condition of that zone was very nice. Okay. Wow. SPY ended up retesting the... See, there's another good example like the Apple one. It came down from underneath. It tested a key level. In this case, that was the 20. Kind of gave us a little wick down. You could have taken this move for the big pop. But SPY was another one where I gave this pre-market plan 460 to 459.15 and pre-market high of 463, just 460 to 242, sorry. And as you can see here, the zone, just like Apple, was just a little too conservative. Didn't get filled. And, as price started moving and it looked like things were kind of trending a bit, similar to Apple, I kind of came up with a plan that said, like, all right, well, where do we have confluence of indicators, of trend, that we can also assume there's good, like if we were making it based on 2510 rules, which are previous price action levels, we have that all in play. You come over here. I didn't confirm this one on the 1 hour. It was purely based on the 10, but you probably could have. Let's take a look. Yeah. Let's see, that would have worked. Nice little 1 hour confirmation to a degree. But yeah, it was just based off of the 10. We kind of had the indicator web, coming into play up here, at least the 20, and then previous price action. Now, because this one was already a little extended after having a dip at the bell, it was going to take a while for these lagging indicators rather to catch up. But now, as the move is kind of staying up here in this upper range, you'll start to see these lagging indicators be a little bit more impactful, as you saw right here. But how did I play this one? So I assessed that zone, just kind of like I said, based on that here. And, I posted it in chat. It came down here and it actually tapped me on this. And then I just took this move. After it broke over the high of this candle, the candle that filled me, I put my stop at break even. I think it might have even been a little earlier, but right around this range, I moved my stop to break even. As I like to preach, anytime the move starts to go in your direction and it's not at risk of like accidentally volatility wicking you out, move your stop to break even. Take that risk off the table, because and more so, it's not even what it potentially does for your P&L, but what it does for your mental, to be like, okay, I'm risking nothing. I'm only in the green, just took a little profit. Like, it can put you in a mental state that gives you a better chance to succeed. So that I preach that to infinite length. I will always be a big fan of that. And then as it continued to break, I started to trail my stop. I think it was 8 or 9 cents, something like that. Nothing small, just kind of in relation to what the contract's price was moving. And then on this action, it came down here to stop me out. And it probably closed me more or less where I would have been had I just taken all of it here. But, there was this potential that it, gave this big fat move up, that I was then exposed to, that I otherwise wouldn't have had that opportunity. So for zero of the risk, I was able to give myself a chance at a bigger, bigger jackpot, if you will, a bigger win. So yeah, that was it. I mean, you could have actually taken the zone here. I mean, it gave a perfect touch here, and you had kind of like the Apple example, the textbook breakthrough, key level, retest, and go. So really, really strong zone there. I'm really happy with that one and the Apple one, especially considering that they were kind of audibles, if you will, that I had to call. But let's talk about the morning zone first. It didn't come into play, but let's talk about how it kind of came to be, since that is part of my pre-morning ritual. Again, kind of like Ford, actually, you have like this, what is yesterday's price action, treating this bottom line as a resistance, and even this top line to a degree. And then you come back here, so it's like consolidation level, support, support, and then it's resistance, 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 resistance. And I was like, all right, well, that looks good on the 10-minute chart. So then we come over here to the 1 hour. Let's get some confirmation. That looks good here. All right, here you got some support, so it's being defined there. You got some, it's pretty close to, confirming the resistance. And then I came back here and I saw this. Boom, flat tops, flat bottoms, all right here. Good consolidation level. And I was like, okay, yeah, that's the one I want. So let's try that. And we had the 20 working for us on the 1 hour as well, which I felt good about. Had the move come all the way down, we would have had the 50, but after time, the 50 is starting to move itself. But so yeah, I not nearly as not like the Ford one where I was like, this may be the greatest zone of all time. But I still felt really good about this one. And unfortunately, sometimes they just don't come into play. And at that point, you can decide to either not play the name or assess the action long enough to feel like, okay, I have what I consider to be a better probability than a coin flip idea. And if I feel like if I don't have a better probability than a coin flip idea, then I try not to take it. Yesterday, I got really, really jarred and spanked by not following that principle, by saying, fuck it, it's a VWAP, let's just take puts off it. And sentiment wasn't there or something. I don't know. And it led me to what was a very ugly day yesterday. Made it way more difficult than it needed to be. So, today was nice and easy. A lot of small, quick scalps. I mean, I'm not huge up on the day. I didn't recoup everything I've lost yesterday, but we're getting there. And, today is day one of the new green streak, and we got a lot going for us, a lot of momentum moving forward. So, hopefully this helps you guys. I'm super happy that I was able to put a couple of W's together. That does a lot for my confidence tomorrow, and I'm looking forward to closing the tail end of the week out with you guys. Hopefully it goes well. Of course, as always, if you guys want me to take a look at your trades, if you're curious, like, man, I did this and it didn't work, but it looked like it should have, and I didn't hold on any of that nature, feel free to DM me. Or if you want to post it in the group to have the others, critique it, and everything stays in the group. Nobody puts anybody on blast. Everybody's willing to share and talk. And I also know that Diesel and Han, I think it's 7:30 Eastern, I want to say, have been doing. They've been doing like a screen, like a pre-night prep, which is really, really kick-ass. I was lurking on that a little bit. So if you guys are around and looking for just a little bit more charts and screen time, definitely check that out. It's really, really awesome stuff they're doing there. They're really great traders, and they're great about answering questions. So yeah, man, if you're new, welcome to the Skunk Room. And if you've been around a minute, I'll see you tomorrow. Be well, guys.